When we did our last report back in March, the CSO index of house prices actually signalled some pretty sharp falls in the early part of 2015, particularly in the capital of Dublin. Since then, prices have bounced back a little bit in the second quarter, so they're broadly flat through the first half of 2015. And while they're broadly stable, that's still a pretty sharp slowdown from the 25% growth rates in Dublin, 15% nationally, and that's not an unwelcome development. We wouldn't want to see these very high growth rates being maintained in the medium term, because that would signal a bubble was being formed. Looking forward to the second half of 2015, MyHome asking prices in Q2 were up by 0.8% in Dublin, 1% nationally, and those are small increases, but the slowest pace that we've seen since 2013. So again, the story is still there. It's not sustained declines in house prices, but certainly a slowdown heading into the second half of the year. Well, overall, the picture is that Ireland's housing market is still exceptionally liquid. There's very few properties for sale. We had 11,000 housing completions from the construction sector last year. That needs to be 25,000 just to meet natural demographic demand, and current transaction levels are around 2% of the housing stock, suggesting the average property is changing hands about once every 50 years. So a very illiquid housing market. Having said that, we have seen the amount of properties listed for sale on the MyHome website increase, particularly in Dublin between March and June, up 18%. So from a very low base, there are more properties for sale. Maybe some people who are considering selling their home are looking at the prices that are available now and saying, now's a good time to sell. So that's containing some of the upward pressure on prices that we saw over the past 12 months. So still a very liquid market, but some increase in the amount of properties for sale, particularly in Dublin. Well, in the second quarter of the year, we saw the average time it takes to sell a home fall to 5.5 months. In Dublin, it fell below 3 months for the first time. So that's indicative of the tight market that we know is out there, very few sellers, and a lot of people interested in buying a home. And as the market has tightened from 2013 levels, the amount of time it takes to sell a home is actually halved, down to 2.9 months in the capital. So again, if you're a seller out there, it's not going to take you too long to sell. It's a sign of very strong demand in the market. Overall, the level of transactions is still around 2% of the housing stock. That's suggesting the average property is selling once every 50 years, so it's very liquid, but they're still up 30–40% in the first 4 months of the year. So that's a good sign that things are gradually improving, despite the fact some commentators have suggested the central bank's mortgage lending rules could contain activity. Transaction levels are still very strong. One part of that is that demand from cash buyers is still there. We saw the end of capital gains tax exemptions in December. Some commentators have suggested that would lead to a reduction in the amount of cash buyers, but actually cash buyers still account for over 50% of transactions in the housing market, less than 50% accounted by people with mortgages. So still some very strong investor demand. Perhaps a lot of retail investors are looking at leaving their money in the bank and earning maybe 1% and comparing that to rented yields of around 5%. So for many investors, investing in the Irish property market is still a pretty favourable proposition.